Thanks for joining us, everyone, and those of you who joining us on YouTube Live. Appreciate it. It's exciting to see the companies being funded and overfunded, and the more I can spread the word that there are alternative funding models and methods out there for people, the better. When people see, startups that are here in the local community taking advantage of these things and getting funded, I think that's when it becomes real for people.
It's making sure that people understand. We are licensed. This is a regulated process. It's secure. It's safe. It's not something where we could just open the doors up one day. There's definitely a lot of rules and regulations that we follow as a business to keep our license and to protect both the companies and the investors. And that's actually exactly what we're talking about today with regards to the offering document and why that's valuable.
So it is dry topics, but it gets exciting when we're answering your questions. So please ask questions and we'll get to them. Over to you, Alex.
Thanks, Craig. Thank you, everyone, for joining us. Today, we're talking about the offering document, specifically, what is it, how do you read it, and why should all of you care about what it is and what it says. So just like I mentioned, I'm going to sort of go through those sort of key questions. And then I'm also going to break down the offering document itself, the different sections in it, what information you're going to be able to find in each section, so that when you decide to read one, it's easy to navigate and it's clear where you need to go for different information that you're looking for. So what is the offering document? The offering document is a legal document that's provided to investors to outline everything you need to know about a potential equity crowdfunding investment. Equity crowdfunding, the term that we use publicly, actually refers to several different legal sets of rules in Canada, which are called prospectus exemptions. And those rules are what allow companies to raise investments directly from the general public using a platform. Before these rules, companies had to go and raise funds from high net worth individuals or get a loan from a bank. So even though we talk about equity crowdfunding as almost one single thing, in Canada, the way the rules work, there's actually several different rules that could be used to facilitate something that looks like equity crowdfunding. The majority of these rules require some form of legal document that outlines everything an investor might need to know. So as part of the rules that allows the company to raise money using a platform in this way, the government mandates that they provide this sort of document, whatever it's called, to investors as part of their campaign page. So the most common rule, the prospectus exemption that is used in Canada for equity crowdfunding, is called 45506 startup crowdfunding. So it's a little bit long-winded, but because this is the most common and popular rule, we're going to talk about that rule. And the document that's required as part of that rule is called the offering document. That's its name. So we're going to talk about the offering document associated with that rule. So far, all of the campaigns on Equivesto have been run under 45506, among other rules, and they have all had offering documents available to investors, just for a bit of context. So, okay, now you know what it is. It's a legal document associated with equity crowdfunding. Why should you read it? Why is it valuable? So the offering document is a key document for investors. I've said this a few times. And it's key because it provides a clear description in plain English, not super crazy legalese, of your rights, your risks, and the details of the securities you're buying, the company that you're investing in, and the management team of that company. So basically everything you would need to know as an investor investing in a company should be included in this document. And it's usually between 10 and 20 pages. This document is actually legally binding to the company. So at the bottom of the document, when we talk about that section, I'll mention it again, the company and its management team have to sign off and say, this is true, we promise it's true. And that document gets presented to you as investors as part of the campaign, but is also submitted to the securities regulators at the end of the successful campaign as an official record. And so there's a lot of time and effort to put into the document to make sure that what you're seeing in there is true and factual, so that you as an investor, when you read it, you know, this is the real details of what's going on. Also, as an investor, the way the sort of risk disclosures work when you're actually signing off to invest, you have to confirm that this document has been made available to you. And if you wanted, you had an opportunity to review it before you invested. The document itself is located on the campaign page of any company raising. So on Equivesto, the campaign page is sort of text, video, and images. And if you scroll down to the bottom, all of the documents associated with the campaign are attached there, including a shareholders agreement, pitch deck, anything like that. And of course, this offering document. So it's located there on the campaign page, and it tells you everything you need to know about the company. But what is everything that you need to know? What does that really mean? And why should you spend the time to open up this PDF and read it? So the offering document has several sections. There's actually 14 sections in the document, and in the document, they're actually called items. So you can see the list of the first 7 here: the risk of investing, details on the issuer, the business overview, the management team, the startup crowdfunding distribution itself, which is the campaign and the issuance of the shares, details on the issuer's business, use of the funds that are being raised and that have already been raised, any past crowdfunding distributions, the money that's being paid to us, the funding portal, the risk factors associated with investing and the business, any reporting obligations the company has to you, an investor, any resale restrictions, which all of these securities have very much resale restrictions. So this is just reminding you again that you won't be able to sell your investment for the short to medium term and potentially at all. Any rights that you have as a purchaser, and then finally the date and the certificate, which is where the company is sort of signing off and certifying that this is true. So let's go through some of these sections or items and show you what it looks like in the document and what exact details are included there for you to review. There's actually a secret section right at the beginning. This is a little bit pixelated, this image, but essentially at the beginning of the document, there's actually a series of instructions for the company. So this isn't something that you as an investor need to worry about, but this section right here is the first thing that you'll see when you open the document. And it's essentially the instructions that the company have to follow. And you can see it even says, draft this offering document so that it's easy to read and understand. Be concise and use clear, plain language and avoid technical terms. It's very clear from the government that what companies are supposed to be doing is preparing this document in a way that it's easy for you to read as an investor, and no one's trying to sort of pull one over on you. It's not in very complex, legalese like a shareholders agreement. It's supposed to be straightforward. So the first section, risk of investing. And again, I apologize for the sort of low quality screen grabs that I have, but it's all I was able to get. I wanted to make sure I could actually show you what the document is going to have inside it. So the first item is the risk of investing. So this is required in bold type at the beginning of each offering document, and it's right after that instruction section. And essentially it says very clearly, no securities regulatory authority or regulator has assessed, reviewed, or approved the merits of these securities or reviewed this offering document. Any representation to the contrary is an offense. This is a risky investment. So it's just letting you know that unlike when a company goes public and lists on a stock market, the regulators themselves have not read and reviewed this document. So they just want you to know that it's a high risk investment. And because it's small and lots of different companies are crowdfunding, and to make it easier for businesses, the government isn't forcing businesses to send this document to them, which they read and review before they can raise capital. Companies have to provide this to the securities regulators afterwards, but not before. Next, we get straight into it. So we talk about the issuer. Who is the issuer? The issuer is the company issuing the shares or securities as part of the crowdfunding round. So it's a simple high-level background section on the company. So what's their legal name? Are they incorporated? where are they incorporated, where's their office, telephone, website, and who is the main contact person. What's their name, their position at the issuer, where's their address, telephone number, email. It's how do you get a hold of this company and their person if you ever need to as an investor. It's right there for you. Next, a quick business overview. So it's a short 2 to 3 sentence summary. What do they do? You should be able to read first thing and get a simple explanation of what the company does. They make widgets for iPhones. They make hats. They created Facebook. Whatever it is, should be very simple. Next, the section's a little bit longer, and this goes into the management of the company. So for every critical management person, which is a director, so anyone who sits on the board of directors is there, anyone who is a promoter, so anyone who is going to be, talking to a lot of people about the raise, anyone who is an officer, so a key leader of the management, often like a founder or CEO, and anyone who owns 20% or more of the company, all need to be outlined here in this section. And for every person, we need to know their name, what their job has been for the last 5 years, any sort of experience, education, any sort of background information that makes them good for their role with the company. We need to know the city that they live in the province. We need to know their current role at the company and the percentage of their time, their working time, that will be spent on the issuer. So you can see, these people are all board members. They're only spending 20% of their time on the issuer. That makes sense. But if the CEO of the issuer is only spending 20% of their time on the issuer, then that's going to raise a couple red flags. You're going to say, wait, shouldn't you be spending 100% of your time working in the business? Important information there. Next, for all those same people, how many shares, how many securities of the issuer do they own? How many, what price did they pay for them? How long have they had them? Who else has some control of the company? You can see all of that there. Any special rights or things they might have, that should also be included there. Criminal history and details. Has any of those people had a summary conviction, a quasi-criminal offense, misdemeanors, or any offenses internationally that is important to know about? That is all checked here, and of course verified by Equivesto before we even look at any documents the company's been preparing and consider putting them on the website. We check all of that ourselves, but to confirm that information and provide that to you, that is here in this section. And lastly, securities and regulatory history. Has any of them, been subject to any orders or sanctions, been bankrupt, managed a company that was sanctioned? Of course, if any of these things come up, it's more than likely that we as a platform would not allow them to raise on Equivesto. But regardless, that information is here for investors to be able to see and confirm for themselves. Next, we talk about the startup crowdfunding distribution. So what does that mean? It's the details of the actual current raise that's going on. So what prospectus exemption is this? This is that startup crowdfunding 45506. So it's just talking about which provinces are participating in this raise. What is the ending date of the raise? Which portal are they working with? Hopefully Equivesto, and our official portal is registered under Equivesto Canada Inc., a subsidiary of Equivesto. Who's the contact person? Me. How do you get into contact with me? The email's there. It also asks for any details about amendments to the campaign, the types of securities that are being offered as part of the campaign, the rights of the securities being offered. So, okay, maybe you're buying common shares. Are you buying Class A or Class B common shares? Do your shares have voting rights? Do your shares have access to dividends? What other rights are included for you as a shareholder? For companies to raise on Equivesto, we require them to have both tag-along and drag-along rights for shareholders. Essentially, those mean that if the company is going to potentially be sold to another business, you as a minority shareholder cannot be left behind and stay in the company if the CEO is selling all of their shares to the new buyer. So you get taken along with them and you can participate in that sale so that you can't get taken advantage of. So that's rights in there that are to protect you, and we mandate those. It also talks about the minimum offering amount, the maximum offering amount, the price per security, and the minimum investment for each investor. That's all included in this section. Section 6, the issuer's business. So this is where we really get into the details of what the company actually does. So it reconfirms the summary of the legal structure. So it's a corporation and where they're registered. Are the corporation articles of incorporation and shareholders agreement available to you as investors? Usually they are, and they're attached to the campaign page. Is the issuer profitable? Is it conducting operations? Are they in the development stage? That is clearly outlined in section 6.4. And this section, specifically 6.1, should go into real detail about what the business actually does. It should talk about, their operational goals, what they've been doing so far, their competitors, their marketing plan, that sort of stuff. So you can really understand what the business does, what they're trying to do in the future, everything like that quite clearly. And are there any financial statements available? If yes, where are they located? If there are financial statements available, they should be attached to the campaign page, and that will be outlined in 6.5. And how many securities are outstanding and what was the price paid? Essentially, 6.6 confirms how many shares have been issued. So how many shares exist from the company and have been given to other people, and how much did they pay for them? If you're seeing the share price at 5 cents, and you want to see, okay, who else paid what for the shares? If it's only been founders who have received shares before, potentially they received their shares for free or for a very, very low price because they put in time and effort to make the company grow. That makes sense. If there's other people who are investing, you want to see where your price comes out next to them. That's all in 6.6. Next, use of funds. This is a very important section. Well, they're all important, and I feel like I'll keep saying that through the duration of this talk, but section 7 really outlines the details of what have they used the funds that have been raised previously for. So in detail, what did they use them for? What did they do? And then next, what are they going to use the funds from this raise for? Both assuming they raise the minimum amount and assuming they raise the maximum amount. So they'll talk about here, okay, part of it is going to be given to us as our payment, but are they going to use it for marketing? Are they going to use it for, creating a new product or growing their sales, improving their technology? Everything like that needs to be outlined here so that you as an investor can know, okay, this is what they've said that they're going to do with the money, and you feel comfortable about that information being provided to you. Section 8 talks about past startup crowdfunding distributions. Have they raised money through equity crowdfunding, specifically this rule 45506 startup crowdfunding before? Was it successful? Was it not successful? If it was successful, what has happened since then? What have they done with the funds? All that sort of stuff is outlined here so you can see, what happens and what happened with those other campaigns. Number 9. Funding portal compensation. This is pretty straightforward. This outlines the fees that are being paid to the funding portal. So at Equivesto, we charge an application fee and a commission. So those are the two ways that Equivesto makes money. So the details of exactly those fees and how much they're estimated to be are included in section 9 of this document. So that's something that you can see as well. 10, risk factors. This, again, another critical section. Section 10 is quite long, and in paragraph form, it describes each risk that faces you as an investor when investing. So it talks about general risks associated with investing in private businesses, like, there's a chance that the company might not have an opportunity for you to sell your shares, or the valuation of the company might change, things like that. But then also risks associated with the company itself. So if the company's goal is to create a bunch of rockets going to the moon, one big risk would be getting the license from the government to even test rockets, or being able to get a license to purchase rocket fuel from someone. All of these things would be risks that would be outlined here. And the goal of this section is to highlight risks to you, an investor, that you might not have been aware of. So you might be looking at a business and, it sounds great and exciting. They're going to do all this good stuff. You might not realize that they need all these different certifications and rules that you weren't aware of. And so this section will say very clearly, hey, yes, we've got these exciting ideas. We're going to go out and do them. And we're really hoping we'll do them and it'll be amazing. But there's a few little things in here that could stop us. And it's important that you know what those are and you're aware of them before you make your decision to invest. There's more details about the types of risks you can expect to see at equivesto.com/risks. So head there and check that out as well. Section 11, reporting obligations. This section outlines any reporting that you as an investor can expect to get from the company. The requirement, sort of the bare minimum, which most companies are, that's usually what they provide, is access to the annual financial statements. So the company, whenever their fiscal year end is, so whenever the company's official end of their year is, it's not always December 31st, but whenever that is, they usually spend 2 to 3 months after that preparing their financial statements. And then at that point, they need to make those financial statements available to all their investors. Companies might say here that they plan to provide more frequent reporting to you. So they might provide an update email every quarter, or they might provide some other statements to you as investors. But this section clearly outlines what sort of reporting and updates you can expect from the company. Section 12. So this is a clear restatement of the resale restrictions, which, and I'll read it out, the securities you are purchasing are subject to a resale restriction. You may never be able to resell the securities. In Canada, in the United States, and many other countries, if you invest and you own securities in a private company, part of what that means is that you're not able to sell them. When you purchase them, that was a primary market transaction. So the company created the security and sold it to you, and that's what Equivesto does. A secondary transaction is when you, the owner of the securities, but not the creator of the securities, are selling them to another investor. And in Canada and the United States and many other countries, there is no secondary market for private securities. There's no way for investors to sell private securities to one another, and that's what makes them private. If there was a secondary market, then there would be more regulation for that, and it would be a public market. It would be on a stock exchange where anyone can go sign up and invest. So it's important to keep in mind that there may not be an opportunity for you to sell your securities in the future when investing in private businesses. That's part of the risk associated with it, and that ties into the high potential for returns. It's that balance between the risk and return. Section 13, purchaser's rights. So this section is reiterating your rights as a purchaser of the securities. So a critical right for everyone to remember is you have up to 48 hours after purchasing the securities to change your mind. I don't think there's any other securities or investment situation where you can have a full refund up to 48 hours after buying it, no fees, no questions asked. If you buy a stock in the stock market, it's actively trading. You can't turn around and change your mind if it loses money in the first 5 minutes. That sucks, but then you just have to go and try to sell your shares to someone else and you've lost money. But with equity crowdfunding, you have 48 hours. Maybe you invested and you were excited. You went for a long walk and you realized, you know what, shouldn't have done that. I should buy a snowmobile instead. You can come and ask for a full refund and we'll give one to you within that 48-hour period. It also talks about, some other rights that you have, and it's a pretty standard language. So this paragraph is always added in section 13. And finally, section 14 is the date and the certificate. So it's the date the crowdfunding offering document was prepared and provided to you, and then also provides the signature and the name and the position of everyone certifying this document, promising that it's true. And this is basically the company signing off and saying, yep, everything in here is correct, and this is what we're going to file with the regulator. So that is a pretty quick summary of everything you need to know about the offering document and why it's valuable for you as an investor. If you'd like to learn more, you can head to equivesto.com/learn, or you can visit our portal, portal.equivesto.com/offering/browse to check out real offerings that are live right now and read their real offering documents yourself.
Yeah, we do have a question here from Patrick. We might need a little bit more information here, but how can a crowdfunding be utilized for an adoptive technology consortium?
Okay. To be honest, with that sort of label, I don't know exactly what it is that you do. So I think I would need to know a little bit more, Patrick, about what exactly the business is and what it does to work. Generally, for equity crowdfunding, the platform and crowdfunding itself is a doorway. It's a way for companies to raise capital, but companies looking to use this method shouldn't come with the belief that, okay, there's almost 2,000 investors signed up on Equivesto. This means that 2,000 people are going to invest in my business. That's not how it works. There's no guarantee that anyone signed up on the platform would want to invest in you. And so it's important for you to come at it with the approach of, okay, I need to make sure that, me and my team and our company, we've built interest, we've built a community, we've done marketing work, and we've attracted people to the idea of investing in our company. And those people that you bring are the ones who will be investing in the business. So the first thing is businesses that have a strong community and have a strong message and idea are the most well set up initially to be successful with equity crowdfunding. They've already got that community. So they will typically do well with crowdfunding. From the legal side, can crowdfunding be used for an adoptive technology consortium? Crowdfunding is typically best with corporations. So is your business incorporated? Is the technology that's been developed owned by your business, or is it owned by individuals who developed it? You want to have, you want your business to be something of value itself, not just tied to the value of the individuals who are working for the company. So that's important to know. Also, with crowdfunding, at least on Equivesto, we require at least a minimum viable product or service before you can raise. So do you have a piece of technology that's sort of almost ready to go to market or demonstratable? That's a key piece as well. But if you want to learn more, Patrick, I would go to equivesto.com/companies to read more about our requirements to raise.
So we have another question here. If you set a minimum raise and reach it, and apparently this has happened with a few of your companies that are overfunded, can you increase it depending on the amount of interest from investors, or you just keep it at the minimum and show it as overfunded? How does overfunding impact equity distribution?
That's a great question, Ali. So essentially, typically you would keep it at, you wouldn't adjust your minimum raise amount. So you set a minimum and a maximum raise goal. So the number of securities your company is going to issue is at that set price per share. So if you're issuing, shares at $1 per share, if your minimum raise is $100, you're going to issue, 100 shares. And if you issue 1,000, if you raise $1,000 at your maximum, then you're going to issue 1,000 shares. It's not like there's only a certain pool of equity available, and then as more people come in, the price changes. So the price is set before the campaign even begins, and you choose a minimum amount you're willing to raise, and then that minimum number of securities you're going to issue, and a maximum amount that you're going to raise, and therefore a maximum number of securities that you're going to issue. Talking about your campaign being overfunded, that's usually a great marketing tool, because then investors know you've already hit the minimum amount that you need to go forward and succeed. So now, you know that this idea is going to go forward. It's got the money it needs. You can essentially join in with less risk as an investor. So often, framing it as, keep your minimum kind of what your minimum really is. And then once you've hit that and you're moving towards your maximum, that can be very exciting for investors who are seeing that and want to participate. So that's when we use that overfunded language. What happens when you hit your maximum? Well, the campaign ends. So no one can invest beyond your maximum. And that's just sort of based on the legal nature of how equity crowdfunding works.
So I had posted a link to the OSC, and I might have been the wrong one, Equity Crowdfunding Offering Document
Yes.
45-108.
Yes.
And there's a question here saying, the sections you mentioned differ slightly from that particular document. Now, did
Yes.
I post the wrong link or?
Yes. So that's a great question, Amit, about the offering document. And so, as I mentioned at the beginning, I'm referring to the offering document associated with 45506 startup crowdfunding. 45108 is a different type of equity crowdfunding. It's a different one of those legal rules. And actually, not many people have used 45108 for equity crowdfunding. They both require something called an offering document, but you're right, they are different in the order and they do have different sections, though they are quite similar. We've had companies, we had a company attempt to raise using both at one point, and so they had the 45108 offering document and the 45506 offering document both on the campaign page at the same time. But right now, we find most companies are using the 45506. You might say, okay, what are the differences? 45108 lets companies raise more money, but requires much more paperwork. And so the document itself ends up being much longer and is a bit more complicated to read. 45506 is a bit simpler and concise and really focuses on the key areas for investors. So from the perspective of both companies raising and investors looking to review an investment, 45506 is a bit easier to understand, sort of get straight to the point. And so that's the one I sort of referred to here. We haven't had a successful offering on our platform yet using 45108, though that is still an option. So this discussion was about 45506, which is a different document. But thank you for your question.
And thank you for clearing that up. Sorry about that. I just was Googling that link and I posted the wrong one.
It's okay. Just so you know, Craig, 45506 was only allowed in Ontario starting in July of last year. And it's not like it wasn't a huge announcement when it was created. It was created through something called an interim order. And so finding paperwork on it might be a little bit harder than 45108, which is like, it's been long standing. It's been around for, I think, about 4 years.
Alex, if people want to get a hold of you and find out more about equity crowdfunding, what you do at Equivesto, where do they go?
You can simply follow Equivesto itself on all of its different social media channels at Equivesto. And we post updates about the current campaigns that are running, how they're doing, all sorts of stuff like that, and campaigns that are coming in the future.
Thanks again for your time. Thanks for all the great questions today. Really appreciate it. And we'll see you again soon.
Thanks, Craig. Thanks, everyone.